All right, guys.
You ready? Let me know that you can hear me loud and clear. And we are ready to go. All right. Cool. So, this is where we start our week. And for those of you who were around last week, you remember, especially for the new guys, we spoke about the fact that there is a cadence that goes into preparing for a great week in the market. Your weekend, your Sunday, and to a large degree your Monday usually will depend how your Tuesday to Friday goes. And so we looked at the concept of developing a trade plan and preparing for the week and all that. The videos are available in the telegrams. If you don't know where they are, give me a shout and I will send them out to you, the order in which you should go through them. But here we are going to take a look. So usually on a Sunday, we will take significant time to look at what happened last week. Now, I don't think we need to do that today because on Friday and Thursday night and Friday morning, we pretty much rinsed what happened last week. And so today, we're just going to go straight into into this week's stuff because I think we covered pretty much everything that happened last week in great detail. So, with no further ado, of course, you know that this month we're watching three pairs. GU, let me just get a blank canvas. Okay, that's Reggie's strategy. Just looking at that hurts my soul. Looking at those indicators, it hurts my soul. It feels like I'm betraying institutional order flow. But anyway, so by the way, can you guys hear any noise in my background? I've got a very loud air conditioner going on in this room, but I think I've set my microphone so that it's not picking it up. But if you can hear it, let me know. I'll put it off and I'll just bear the heat. So, this is our watch list. For the month of July. Good to see you, Gerard, Josh, Reggie. Who else is here? If you're a registered student and you're in this video, or if you're in the comment section, just give me a shout so I know who is here. Good evening, Priscilla. So as usual, we can tailor what we're doing to you. So, right, number one, Euro USD. Euro USD. Number two, GBP USD. And number three, USDCHF. So this is our watch list. Well, this is my personal watch list anyway. You're allowed to have whatever watch list you want. If you want to have 27 pairs on your watch list, God be with you. Go for it. More power to you. Me personally, that ain't how I roll. So this week I'm only looking at three pairs. In essence, what this does is it gives me some peace of mind. I don't need to do, or I don't need to know what the market is doing on a vast majority of pairs. There are pretty much 27 pairs that I would advise, or the limit of pairs that I would advise that you even bother trading in the first place. is 37 long, 27 long. That's each of the 7 major currencies against each other. But this week I'm only analyzing 3. And if you notice, they're all the USD against a European pair. This way, I know exactly what's going to happen at what time of the day. I'm not interested in Asia. I'm not interested in midnight to 6 a.m. London time. I'm only looking at 6 a.m. London time to 10 a.m. London time, and then 12 noon London time to 3 p.m. London time. So I'm stuck in the market 7 hours a day at most over 3 pairs. And of the 3 pairs, there is a fair amount of correlation. EU and GU are fairly correlated, about 70% correlated, meaning if something's happening in one of them, there's a good chance it'll be happening in the other. And so I get to pick one of the two. And of course, there's a Swissy which does its own thing. So like I said, I'm not going over last week's price action. We did that on Friday and Saturday. Just going straight into the week. What are we looking for? So the first thing we do, as usual, is we go to the dollar index. Give me a quick second. Just going to go find, see, show all. So I'm going to find the dollar index on this chart. Where is the dollar index? Right. Where are you, dollar index? Aren't you here? Okay. If I can't find you here, I will just open a brand new chart with the dollar index in it. So there we are. Indices USD index. So template, IQW simple. There we go. Good. Here we are. And I'm going to start looking at it on the 4-hour chart because I know what's already happened on the weekly and on the daily. But you know what? Let's start from the weekly just so you guys can see it. We did this last week. So what's the dollar done? I'll just take this away so that it's a brand new slate in case you didn't watch last week's analysis of the dollar index over the weekend. Right, delete, and delete. So blank slate. There we go. So prices run up. This is a classic manipulation pattern here. So it took that out and then took this out here. In essence, price created this consolidation, took it out, and had a market structure break to the south side. So that would have suggested it was bearish at that point. However, it came back all the way. One second. It came back all the way and then took out that high to the north side. In essence, that then, one second, let's put this up properly. Right. So that then suggests to me that this is actually what happened. That this was not the manipulation. Sometimes you get it wrong the first time, and then on the other side of price doing what it's done, hopefully you haven't entered the trade because you're following your rules. It shows you what really happened. So it proves to me that this was really the manipulation. So this is what you call a double. So it went up there, came down here, it neutralized both sides, in which case this here was the first expansion, and then it nicked the 61.8, and then it went back up in essence, and then it came back a second time into the 50 level. As you can see, it's always coming back into that average price range, and then it's gone up again. Okay, now remember I told you last week on Friday, if it comes as far as this, even as far as 38.2, I would look to see, one second, let me adjust my Fibonacci properties here. Right, so one second, let's see this here. So I am expecting this to, let me see, I'm missing one there. Let me add it in. So add, right, 6.8, 1 point, 2-1. And we're going to call that the 121. 1-0. Right? So I'm expecting, if that is correct, if this analysis is correct, then I would expect this to go to at least this level here. And in all probability, probably challenge this 1.618 level here. Right? Now, let's close that there. So in essence, on a weekly chart, this is my first target. This is my second target on that weekly chart. I'm going to take that away. All right, let's blow that back up. And so it's dipped below that. It's coming to this order block here. I'm just repeating this for those of you who weren't here last week, just to give you an idea of where price is in the long term before you start trying to get short-term price objectives. And then from that point, it broke market structure to the upside there. And that level has been significant. It's refused to let price beneath that level there. When it did that, it formed this order block here. It's a weekly order block, which has been holding price up. However, once it did that, it came and nicked that up here. And it's now made a very deep retracement. A retracement so deep that now we're not sure if we can trust it. It's done this. High to low. It's come below the 21.4. But we had a sharp weekly reaction and then a bullish week. And then we've had 3 successive weeks where it's refused to rally, but it's been respecting that level there. Now, there's a couple of things that could happen this week. Number one is this is an order block right here. It's what we call a rejection order block or a propulsion order block. If you drop down to daily chart, you will see it. So that's the daily order block there. And so, in fact, to do that, also, let's see, what else do I need? What else do I need from here? I'm going to put out this level here. Right. And I've cheated because usually these lines should be sandy brown. Actually, I'm going to put them in sandy brown because I don't want to get confused when I start diving down deeper into the chart. Let's use another brown color. Let's use maroon. So I'm going to change all these lines to maroon so that when I'm trading intra-week, I know that they came from a weekly chart. That's why I'm putting all these in this color. I need to know what chart they came from, or what time frame, sorry, they came from. Right. Okay. Cool. So, anything else that I really want to do on the weekly chart? Not really. Remember, I showed you how to work with each chart because most of the levels that I'm looking for, I will find them on a daily chart. So I'm going to go high, low, open, high, low, and close. Remember that from last week? So we're here right now. So that is a valid price level. That's the low of that candle. And of course, I'm going 300 or 350 pips in each direction of price. So I go from here, 350 pips will be roughly. So this is the lot. This I'm not going any higher than this candle here. And down on this side, because I don't expect price to move more than 350 pips this week. It may. I just don't expect it. If it does, I'll readjust when I get there. So you can see this is within 350 pips. So it means that this order block is in play. Actually, no, sorry. I'm on the dollar index. No, sorry. I'm on the dollar index, so no. I forgot I wasn't on the pair. I'm on a dollar index, so there's no need for all that. I don't even need to open high lows and closes, to be honest, on the dollar index. I'm just getting some idea of a bullish or bearish trade direction. So that's what we need to do. We come to the daily chart. So we can see that there on the daily chart, there is this here. These, now, I am going to bet you at some point over the next few months or weeks that this highs here are going. Mark my words. Reggie, let me put that on the screen. 350 pips. I am calculating that I don't expect on the pairs I trade, the EU, the GU, and the USD a typical week is about 300 pips roughly. So 350 means that I don't expect price to move more than 350 pips in either direction from where it is right now. Now, it could happen. If it does, I will recalibrate midweek. But to get the week started, I'm just calculating that the highest movement I will see either direction will be 350 pips from where price opens up the week. It's just a rule of thumb that I use based on my experience in trading. So I have a feeling that that's going. Now, is it going this week? I don't know. Also, this on a daily chart, average true range, let's see. Let me answer that question. Let's see. So the biggest week we've seen in recent times, but again, I'm not going to do that on a dollar chart. I'm not going to do that on a dollar index chart. I'll do that on the actual chart of the pair I am trading. So when we get to the actual pair I'm trading, or we're trading on our watch list, pairs we're trading, we'll look at and see what the previous, the recent weekly ranges have been. Right. So now D1, this here is juicy. So there's a good chance that price may want to do that this week. Right? Take out that level there. And if it did that, I would then expect it to rally into this level and maybe even up to here. So rally into there. And I would also draw out this level here as a fair value gap. So this is my number one scenario this week. However, so I'm going to leave that there because that's that level that's been holding price up. However, oh, sorry, clear the screen. Yeah, thank you. However, there is a chance that this may happen. It could just blow that out. It could go down, come back this way, and then begin to challenge this low here. Right. This right here. There's also another set of weekly order blocks here. Shape. Give me a quick second, folks. One quick second. Right, so there's another set of order blocks here in this range here as well. So that's a possibility. I don't think it'll finish this. If it does come down, I don't think it'll finish it in 1 week, but you just never know. So, and of course, to do that, it could also go the other way first to take out this liquidity here before it then begins to come down. So how do we know which of these to pick? We wait for Monday to tell us. That's the answer. Monday will give us an idea as to what this is doing. Okay. Let's see now. Anyway, we're getting that off the week of the. So that's now on a 4-hour chart. Let's open up the $4 index chart. Let's see. Where are we? Okay. Right. New chart. Indices for dollar index chart. Now I'm going to leave this in here because I don't want to have to draw these again. So on the 4-hour, this is what we saw to end the week. Get rid of this. That's a daily level, but this is what we saw to end the week, right? So the week started here, price went up there, came back down. So it's taking out this level here. Now the question is, again, is it trying to come up here? In which case it could do this. Trendline properties, you could do that. And then come up here. Or it could go up and then come down, or just go down straight, like we said. Come down straight, come back up, and then go down. We're going to be tracking this to look for this. Now, let me show you this. I taught this last year, I believe, or was it early this year? Let me see if I can find it here. If you come here to the channel, if you come to playlists, and let's see now. Okay, so the VIP actually, so I'll send you guys this because you're not going to see this on the actual channel. It's unlisted. The actual playlist is unlisted, but there's one video from that a couple of videos actually from that playlist that are supposed to be only for registered students, but we made a couple of those videos actually accessible to everybody. It was our way of investing in anybody who wants to get better at trading. So if you look for this video here, let me see now. Right, introduction to liquidity. So these videos here, introduction to liquidity, market phases and profiles, right? There's 2 videos here, and then you also want this video on market conditions, reversals, consolidations, and trending. So one, any video you see with this thumbnail that looks similar to this, go watch it. It says how markets move in a crisis, introduction to liquidity, market phases, market conditions, trending, reversals, and consolidations. Go look at these. These are very important. The gold ones are strictly for students. Right, so let's go back. Now, I want to show you something. I want you to look at this pattern I'm about to show you. It happens almost every time there is about to be a significant move in the markets. And you especially see it on the 4-hour chart and the daily chart. You will notice, I taught this in those videos I showed you, but I'm going to show you again. Shapes. You will notice something to this effect. A period of consolidation, right? Price will rally and take out the high formed by that consolidation. 'Cause, 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 'c it will drop and take out the low of that consolidation. And then it will rally back somewhere inside the consolidation. Usually halfway is usually a very good level. Like if you see halfway here, halfway in this consolidation was roughly here, right? See that there? That halfway line, but somewhere within the consolidation, and then it will make a full expansion. So here it comes to 7816, and then it runs to where it's supposed to be. I need you to see that. Now, it takes time to see it, but once you see it, you cannot unsee it. This is the golden ticket in foreign exchange. If there is such a thing as a golden ticket, this here is it. Consolidation forms, price rallies, and takes out the consolidation high, and then drops below it, comes back to somewhere usually around halfway, could be higher, and then makes its full run. This is what you see in intraday trading. Let me show you. Let me get an actual pair and show this to you. Right. Let's go somewhere where trying to get away from these markings on the charts already. Okay, so it happens every day, every week, every month, and sometimes every year. Look at it on a daily chart. This is the London scenario that we've been showing you. This is the consolidation, right? Look at this, right? In this case, it goes, it's bullish, so it drops beneath the consolidation. No, Reggie, let's see. Okay, it's taking a while. I can see your comment on my phone. It's gonna take a while for it to show up on my broadcast software, and then I will put this on the screen. It goes the other way. Either way, consolidation forms, price takes out the consolidation one way or the other. It'll first take it out to the wrong side. Right, that's what we call the manipulation. Go watch those videos, the ones I just showed you. They're very important. And then it will then take it out the way it really wants to go. Right? But relax. If you miss this, don't sweat it. You know why? Because it will usually come back at or near. It doesn't always get directly to halfway. So that's the question. Is this always bearish? No, it happens both ways. So it doesn't always get back to halfway, but it will come back to somewhere inside the consolidation. Look at that, right? So again, just hit your Fibonacci. High to low. Look, it's coming back inside. Here it's almost exactly 21.4. And then now in this case, it came to 21.4. It hit 1210. This would be your exit. If it only stopped at 38.2, you ride it all the way to 1618. Look at that, right? Well, what do you know? Let me put that here. So that's the high of the consolidation. The same thing. Second, let me put this here. The same thing happens the next day, where you say, I'm glad you asked. Look at this again. Consolidation. In essence, from our Friday session, we're talking about periods of low volatility. This is why you don't want to be entering a trade at a period of low volatility. One, not much is going to happen anyway. And two, a market maker is going to use that period of low volatility to create a direction. If you are trading at these times of the day, you will notice that the pips are huge. 4, 5, 6, sometimes I've seen 9 pips spread. The spreads, are huge. Because they don't want you in the market anyway. If you're already in the market, they don't want you to leave. And if you haven't been in, they don't want you to get in. They're pairing orders on both sides, looking to see what they want to do. And what do you know? In fact, 1 second, I'm going to adjust this. Because remember I said 6 a.m. in the morning is when you should start looking to see what you do. Well, that's 3 a.m. This is 2 hours ahead of server time, so I'm going to 8. So basically 8 a.m. on this chart here. So this box technically is this big. That's the box, right? Okay. Well, what do you know again? That's the high. Like I told you, once you see this, you cannot unsee it. It will change your life. That's the low of the consolidation. So, what happens? Now, in this case, it fakes it out one way. It comes back the other way. This is where you have to be careful of the double fake out. This is why you need a directional bias. Now, let me take this away so you can see this clearly. So, we're doing both analysis and teaching at the same time, right? Cool. If you see this, right? Price dips in here, takes out that level. This here is a bullish market structure break. If you have established that your directional bias this week is bullish, you are not trying to take a bearish trade because it could kick you out. This is why I always say go into the market every day looking for one direction. What is my bias today? If your bias is bullish, you are not taking any entry north of this box. If it keeps going and you miss it, fine. If it keeps going and you miss it, fine. But it should at least come back in here. Even if it doesn't do the manipulation the other way, it should at least... So once this happens, you are waiting for a retracement in that region. Do you get a reaction there? No, you don't. So no trade. It then comes back south of the box as we expect. And then breaks out again. And this time when it comes back, it gives you a reaction in the middle. On this particular day, this is the only entry that I would have advised you to take. 1 second. This here is the only entry that I would have advised you to take. This engulfing here, you stop loss there. 1, 2, it doesn't quite get to 3. And then the next day, what do you know? The market is so giving. It says, do you want some more? Yes, please. We'll have some more. That's the box. Comes down. Back to where? You will see this all the time. This happens at least half of the time. Maybe 4 out of 10. But quite often. It takes out an intermediate low. Where is the intermediate low? Yesterday. Why? This here is a daily engulfing. See that there? That's a daily engulf. Let's put that in green. If that's a daily engulfing, that would look like a D1 engulfing on a bullish engulfing on a D1 candle. This is your bullish signal for the week. In essence, this would have been a scalp this day, but this is the sign that this week has now turned bullish. Well, if that's the case, what are we doing? This is what we're doing. That's the high it engulfed. Fibonacci's there. 1 second. That's the retracement. We go from high to low. We want at least a 38.2, but we also want an intermediate liquidity hunt. This here is looking very juicy. See that there? It's looking extremely juicy. Well, if that's the case, where does it come back to? Right back to this box there. See that? Right back to that consolidation there. That's also a 21.4 deep discount. And then it really goes to the target we know it should get to, which is in this case here, it's the 1618. The 121's there. So you could have gotten out here or here. So that's on a weekly, that's on a daily basis. I'll just delete that chart real quick. Start closing some of these charts up. Now, let's look at this again. On a 4-hourly basis, it's the same thing. The difference is on the 4-hour, you're dealing with weeks, not days. Can you show it to me? Yes, I can. Consolidation. 1 second. Let's blow this up. Right. So coming into the week. Yeah. Consolidation. So that's from Friday into Monday, right? In this case, it doesn't really take it out by much. Literally touches it to the pip. Let's see what that looks like on a lower time frame. Okay, so yeah, it actually doesn't take it out this time. That's fine. But when it blows past that box, comes back into the box here. Look at this. In this case, it's the next week it comes back into the box. Can you guys still hear me? Just checking that you can still hear me, because nobody's responded for a long time. So I want to be sure I haven't lost you. Comes back into the box. Fibonacci. $38.2 discount, right? Guys, just let me know that you can still hear me. Discount, and then it runs Where does it get to? Pretty much the 1618. You see that, right? And this is where you have to be patient now. If you miss this entire week, let's assume, because this is a whole week, right? This is a whole week here, in which price did 130 pips. Okay. If you miss that, don't sweat it. Why? Because now you know how price works. Right? Just wait till next week. What's going to happen next? Actually, no. So that's a day. Sorry. No. Sorry. That was a day, not a week. On a 1 hour chart, that was a day. So it comes back here. So that's a day, not a week. I thought so 130 pips was small for a week. That's a day. Come back here. This is the bullish engulfing. That's a daily high there. This is another daily high. So let's just use that one to make it a different color. That's the bullish engulfing. Let's come back in here. And it goes. Okay, so let's go back to our 4 hour chart and see. So that was this past week there. Here. It's coming to this week here. Again. There's another consolidation. Usually at the start of the week. Not always, but usually at the start of the week. There to there. Comes all the way down there. Again. That's taken out. That's a 4 hour chart. Comes down. Blows up. Comes back where? Inside the range. Not exactly 50% this time, but it still comes back inside, right? And then it shoots off. Till it starts another one here. Now, the weeks where you see real consolidation on Friday and Monday are beautiful. Like this one here. This is a slam dunk. This tells you something's going to happen. Right. So now that you understand that, let's see what we have coming into this week. I need to show you that pattern so you could recognize it. So that when I start talking about some other stuff moving forwards, you have an idea where it's coming from. So I'm going to keep this level active because I have a feeling we may come back in there. Now, going back to the dollar index. These are our scenarios. So we're going to mirror those same scenarios in the GU. Let's see if entry triggers. I'm going to show you that in a second, Reggie. So let's see what's price doing on a weekly chart on GU. So let's see. It took out that low. Let's use maroon. And it rallied. However, it's been in a consolidation in a weekly chart. Now, it took out this 2 weekly highs there. So now I want you to look at this. This right here seems very similar to what I've just shown you on a lower time frame. There is a weekly consolidation there, right? Price took it out to one side here. Reversed through it. You could argue it's come back here. Here, you see, in which case, and we've had 2 bullish weeks, in which case we could see that it's been in here once already. We could be ready to see this week. Emphasis on could. It's not set in stone, but we could. There, or it could use the body of the candle. So I'm just going to draw this all the way up down there. We could see that this week. Alternatively, this could have been the fake. This is the real manipulation, in which case we're getting ready to see this. Come back, sweep this level, come back in here. Or it could just come back into the consolidation and carry on consolidating. We don't know. But we're going to be ready, whatever it chooses to do. In that case, we drop down to the daily chart. Okay, so on a daily, it's done that, it's done that, it's come back here. You could argue that this is now, as I'm tracking GU this week, I'm also going to be tracking the dollar index to see which of my scenarios is it doing. Whatever scenario the dollar index seems to be doing, I am going to invert it for my GU. In essence, I am not going to take a trade on GU in which it is not tracking the exact opposite of the dollar. Even if that scenario plays out, for the extra confirmation, I'm using the dollar index as my reference filter. I want to see it track the exact opposite of what the dollar index is doing. So, okay, so that's my retracement. If this is the case here, remember what I said to you, if it turns anywhere above the 214, I'm waiting for my exit around there. See this high here? It's a daily high. It would be almost perfect price action for price to nick it into this other block here and then drop. So if that's what happens, then this is what I'm waiting for. Or should I say this is what I'm looking for? If that's the way price chooses to move, then this is what I am looking for. Now, this is just one scenario. There are other scenarios in which it goes the other way first. Now, if that's what happens, so I'm going to just take this scenario here to show you how to answer Reggie's questions or question what my entry triggers would be. I'm then going to drop to first a 4-hour chart because that's my reference chart for my own trading philosophy. I'm an intra-week trader. If I'm expecting an up week, because bear in mind, for this to happen here, it could just go straight up this week. However, we could have a down week, right? That's a retracement that then leads us to what we want next week. So I got to be careful. Is this week going to be a continuation or is it going to be a retracement? I don't know yet. I will find out. How? I'm watching for 4-hour stop hunts. These are the levels that stand out to me. That one, 4-hour, and this one here. So that one, this one here, those are the bullish ones. On the other, hey, there's this one here. and this one there. I am going to allow price form a box. Let me get rid of this. This is what I'm looking for. Something like this. This. And this is what I've been using for weeks. I just haven't shown you guys yet because you haven't been ready for it on the mentorship. But now you are. That. Let me move all this up. Something like that. Or something like this. There we go. Something like this. Let me move this down. And then in return, and then a bullish move. Right? These are now, you don't get this every week, in which case you need to know how to pivot to another pattern or another set of entry conditions. I can't teach you all of them in 1 week, right? It's a 12-month course for a reason. But I want you guys to start looking for this one. So look at this. Okay, let me open another chart here just so you can see this real quick. Let's look at the last few weeks and see if we can see how the week has gone based on that one pattern I've shown you just now. There are others. Right, so let's start here. Did we get the box? Yes, we did. That will be the box to end the week there. So that will be the box. The price leave the box? Yes, but which way did it leave it? Quote and unquote, the wrong way. Came back. So in essence, this week, if this was all you were looking for, you would have had no trade. Now, an experienced trader would have seen this, that inside that box, there was another box where this happened. But it happened at the end of the week. But you know what? For the sake of argument, let's just say no trade this week. Next week, what do we see? Another box. Now, when you see this kind of wick, just ignore it. That's actually a telltale sign that that's not part of the box. That whatever drove price back up is going to do that long term. But even if you were to draw it, it still fits the profile here. right? But just ignore that, ignore that wick, right? In which case, that's the low of your consolidation. But like I said, even if you want to be meticulous, well, you can put another one down there. It still nicks it anyway. And then it goes to the upside. However, when it comes back into the middle of the box, do you see a reaction there? Let me know. Do you see a 4-hour reaction there? In fact, do you even see a 1-hour reaction there? Do you see a 1-hour reaction there in the middle of that box? No, you don't. Nowhere in that box there, anywhere up to the middle, do you see a 1-hour reaction until it has cleared this level. That tells you, right? So all the way up here, that tells you that this box is invalid this way. In essence, this is the real direction. And even if you took a trade and you lost 1%, that's fine. You will lose. It then tells you that this is the real direction. It's going up here. To take out that level, let's go back to a 4-hour chart. To take out that level, right? And then it drops. When it drops, where does it drop to? Beneath this level, right? Stick your Fibonacci in which case the trade wasn't this week, it was the next week. It comes back down into that box. See that there? And in coming into the box, as we're always looking for, it takes out an area of intermediate liquidity. This would have been the trade, according to this pattern, the next week. That would have been your trade. And you would have got, so what would you do? You enter here on the engulfing, even if it's a 4-hour chart. If you drop down to a 1-hour chart, the answer Reggie's question, this would have been your entry. This is the first, so it gives you 2 entries. Both of them are engulfing. So this one here was engulfing here. The second time, this was engulfing there. Let's take the better of the 2 of them. In both cases, your stop loss is there. One, 2, 3, 4, 5, 6, 7, 8. There's a retracement. 9, 10. Right. Let's go back to a 4-hour chart. So that's those 2 weeks. Let's get rid of this. Now, this week here, even if you weren't tracking it from the previous week, if you just started your analysis from this week, well, again, there's a consolidation somewhere there, right? Again, like I said, just ignore these long wicks you see here. Well, it's taking out that high there, where back into the previous box, and then it drops beneath the low that week. In essence, you're seeing that the entry of the week you're going to get in is usually going to have been delineated by a previous week's box. I showed you that on a daily chart. Now you're seeing that on a weekly chart. This is Fibonacci. It's above 50, so it's valid. It's not a deep discount, but that's fine. It's into here, right? Where's your entry? First of all, let's do this here. So that's the region we're looking at. Drop down to 1-hour chart. Your entry will be in a 1-hour engulfing coming out of that zone. In essence, here. But even if you didn't want to take that because you weren't sure, it gives you another chance here. So again, entry, stop loss, 1, 2, 3, 4, 5, 6. Right? All right. So let's see. Now that I've shown you that, let's see what we can do for this week. What we can postulate for this week. So that was interesting. Now here, in this other week here, that here, okay, that level, that's interesting. You see that? It's very interesting. Anyway, this is the consolidation there. That's the box. Oh, I've shown you this already in it. So it did that, came back in and went. This week here would have been the box. In this case, like it did here, it's just run. However, if you hold this up here as a big leg, we're back in what we expect to be a selling area. Even though, let's see now. So we said we're looking to either push up here or push back down in there. In essence, we're still ranging. So my game plan or my thought process, let's see. That's there, that's there, that's there. Let me see. So that was the first leg. It never came down to 61.8. If that was the second leg, it has just nicked the 61.8. Right. Let me see. Daily liquid. Folks, I think we're due a retracement. That's just me. I think we're due a retracement. I might be wrong. I think we're coming back somewhere, I would say, either back in there, at least. I think we're coming back at least in there. Or maybe all the way down to here. I will know after Monday. But I will call something like perhaps this. Perhaps it nicks back up here, but at some point it should come back down somewhere into that level. And then make up its mind what it wants to do. So how we filtering? Well, first of all, daily. We're only trading in the direction of daily engulfing. So the last daily engulfing was bullish. I'm not going to trade Monday. You see there's a bit of a momentum loss here. I think we're going to see a daily engulfing on Monday or Tuesday. A drop down. So if I see a daily engulfing on Monday or Tuesday, I'm going to take a bearish trade down into this level here. And actually, now that I see this, it's never returned back to that level there on a daily chart. Let me get rid of these. Price. You see that? While we were talking, because the markets opened not long ago. So I think we're due this to happen here. I think we're due to see price come in there and then rally. So I'm going to wait for daily engulfing. If I get it, that's roughly 180 pips worth. That would line up with this scenario here. It will line up with the scenario of price coming up here, maybe dipping or forming a low there and pushing up into that region. So up on the dollar would be down on GU, and we have almost 200 pips to spare. Trigger, daily, bullish or bearish engulfing price. So let's assume this closes here. Presume that this candle closes here, right? The next day should then go back into that candle just a little bit. Into that candle just a little bit. And then drop. And I would get out just beneath this low there. Once it nicks that liquidity, pull, I would be out. Waiting for another daily engulfing this time. So this, let me see, let me make this black. I'll make it red. Sorry, so that's going down. Make that red. And then I would be waiting for another one around here. That would be green, meaning, I don't know, bullish. This could happen in one day or two. So you could have two trades this week. Maybe just one pushing down. Or Monday could be a manipulation first and push up into this level here. We could see this on Monday. In which case, this candle would form here. That would then be the signal we need to come there. And then whenever this one forms, we then go back up. So if I take two trades this week, if I do from here, so that's 200, 177 pips. If I then go back up from here, back to here, that's 240 pips. 170 one way, 240 the other way. Type yes or no if that's okay for you. Do you think you can frame a 4-to-1 trade on a 15-minute to a 1-hour chart that will give over if you have 200 pips to spare either way? Do you think you can find a 15-minute 1-hour chart trade that gives you minimum 4-to-1? That would be all I am looking for. On if I get that, I might not trade anything else. On EU, let's see real quick. So we've done the work on the dollar index already. We don't need to go through that again. Now EU is ranging, as you can see. It's been ranging for a few weeks, consolidating for a few weeks. But prior to that, it was in a trend. And okay, so right, that went 2 to 2. Okay, so now we've taken out this. Now, if we're going with the dollar index going up, again, we have two scenarios for dollar index. One's up, one down. If we're going with the dollar index going up, then we're expecting this to come down. In which case, if that was the case, right? It's taking out that there. As you can see, there's a box here. It's a consolidation there. And I think it just nicked it last week. Yep, it just nicked it last week. So this is game. Oh, this is game here. Although I would want. Let me see. There is another one here. In which case, you could perhaps say that this is what happened. It's nicked it. My point is, it's not clear to me based on this particular profile I'm giving you for this week, this particular entry pattern. I can see something on a couple of others, but on this one, which is one I'm teaching you to look for this week, it's not clear. So I would leave EU alone till it gives me some clarity. Right? What do I mean by clarity? Well, I want to see some... Okay, one second. This is where some retail traders will say, well, this is making a flag. This is why they do stuff like that. And of course, they teach you that if it's making a flag, you should look for price to break to the upside, right? So they'd be saying price to break to the upside. It could very well be that this goes down. And if it goes down, let's see, where would we be looking for it to go? So when high premium here on this range right here, also it broke market structure there. So when high premium here, also it broke market. So I'm going to get rid of that flag. That's just to show you how market makers punish people who draw trend lines and flags. It broke market structure in a 4-hour chart here. And since then, it has not violated the high of the market structure. So until this is taken out for me, I'm still bearish, right? On EU. Until I see this high go, I'm still bearish. And if that's the direction, right? Let me add something to this. Add minus 1.618. 161.8. Actually, no, sorry, 1 second. No. 1 second. Fibo. Oh yeah. Minus 0.618 is what I'm looking for. Right. Cool. And then I would also add minus 0.12, no, 0.21. Minus 121. Yep. In which case, I would be expecting it to come to at least here. And if it's coming there, there is a nice little order block waiting to receive it. Which is also, wait for it, a consolidation box in its own right. So, I would prefer to take GU over EU because it's clearer. But if you forced me to do something on GU, this would be my preference. So maybe it goes back in here. It goes to that level. I would say it probably goes to that level on Monday to pick up some liquidity. Or maybe even just automatic. Maybe just takes it out completely. But this is why I don't trade Mondays. I wanted to, so it could be this, it could be this, right? Anywhere in this region here. Let's just say that. Let's just be naughty. Let's say it does that on Monday and Tuesday. And then comes down here on Wednesday. I will take my cue from the dollar index and then look for the commensurate move on one of these pairs, but I'm going to go with GU over EU this week, it seems, until EU makes up its mind. If it were to do that, let's assume it just goes from where it is right now, from here all the way down to here. Again, it's 150 pips. That's all you need for a great week. In which case, it could form a box there to start the week. Let's assume it forms a box there to start the week. It goes above the box. Anywhere above the box would be fine. Let's just say for the sake of argument that it's here. Beneath the box. You stick your middle of the box in there. You want it to come to somewhere in that range. And then to drop. Let's put this above here. Let's see. So that again is something you could see happen. Or this could just happen just straight. But I'm tending to be bearish on EU this week until price tells me otherwise. We will see. Again, we're still within this massive consolidation here. So let's take one last look at Swissy and then we'll call it a night. See you tomorrow evening. Template. Swissy 4-hour chart. So we've been coming down. Let's see. Let's look at a daily first. Okay, so right. We called that, remember, at the start of last week, and we got it. That's exactly what happened. So we were right. Order block just there. Now, I haven't yet seen a daily engulfing. So until price closes above that level, we can't yet take this as a bullish sign. I would not be surprised again. We're bullish if we're agreeing that if the dollar is bullish, Swissy should be bullish too. But again, this would not surprise me. Come back down in here one more time. Or even here. Because here we have this. Have this here. We've also got this here. So there or there. Here or there. I'm going to put it there just for the sake of argument. And then this way. Especially on a 4-hour chart. If we get some consolidation going here first. So down. And then up. And if it does come up where I would expect these levels to go. Why? They're clean 4-hour highs. 4-hour highs standing right beside each other, doing nothing. There is liquidity here. I bet you my last penny. Someone has significant orders there. It may not be this week. It may be the week after, or the week after, or the week after, the week after. Price coming back there. Bet you that. Price is coming back there. And just from where we are now, up there is what? 130 pips. Again, that's more than enough to frame a trade on. So, let's go back here where we started. Where did we start? Where did I write those things? Right? It was a weekly chart somewhere, wasn't it? Actually, it was here. Was it? Where did I write out our watch list? I keep this is happens every single time. Okay, so it's not here. It's not there. It's probably here somewhere. There, not there, not there, not there. Here, nope. There, there we go. So for a watch list, our early prediction is EU bearish, / ranging, GU bearish, and Swissy bullish / I'm gonna put incongruent, because I see the Swissy might actually just not follow the dollar this week based on some other stuff I'm seeing. But anyway, I'm just gonna put that there. So now this is where it's gonna test your development as a trader. Like I said, we could be wrong. Monday will tell us. Monday and early Tuesday will tell us. We could be wrong. But I'm going to ask you, especially the new students among you, not to take any pair this week, any trade this week that is not in this directions. Can you discipline yourself to say, even if I see a spectacular bullish trade on the pound, I am going to wait for this. If the week comes and I was wrong, fine. But I'm going to frame my entries this week. I'm going to stock trades in this direction based on our preferred move on the dollar. So we have 3 moves for the dollar, but we believe that we think it should find support and go bullish this week at some point. So if the dollar does that, you come back to these trades here, these pairs here, and you only take them in this direction. You're looking in London 6 to 10, New York 12 to 3. You're looking for things like 1 hour engulfings in the right direction. You're looking for manipulation swings through Asia. So if in EU and GU for the bearish moves, this is what you're looking for. Let me show you one more time. If it's going to be a bearish move that day, you're looking for consolidation. You look somewhere there and you're looking to see this. If it's bearish, that and that. One second, let me move this along. So something like that is what you'd be looking for. This here is usually what happens in London, so in New York, right? If you miss the trade setup in London, many times, most days, this will happen in New York, where price comes back down in here to give you another entry. And for Swissy, we will be looking for a day where this happens. that, and that, and that, and then boom, right? So we're looking for this. 1 second. We're looking for this in EU and GU. And the exact opposite in Swissy. Any questions or anything that you want us to look at with the rest of our time? I think we have another maximum 25 minutes, thereabouts. 23 minutes maximum. We don't have to take all of it. But any questions? Sorry. Any questions or anything that you want us to look at quickly before we go for tonight? Any questions? Does a large spread of pips always indicate market makers manipulation? Reggie, almost always. If you see the spread of pips jump significantly from what it normally is. So for instance, if it's a pair where it's an average two pips, it becomes 6 or even 4. Yeah, something's going on. For instance, let me see. Right, indicators, custom, KPI. Reggie, can you see this right now? What's the current spread? Here, at the top of your screen. My screen. Can you see that? That is 14 pips. Think about that for a second. 14 pips. That's the spread on Swissy right now. Why? We're going into the week. I noticed there was a gap in price. Right? There was a gap. Look at that. Price gapped down 4 pips. Okay, 4's not that bad. Excuse me. Sorry, that was my dinner I had before we started. But 14 pips is crazy. Let's look at EU. What's the spread on EU? So it's just 3. That's still high, right? Because this is a 0 spread account. So my spreads on EU on this account are usually about 0.5, 0.4. 3 is still high. But Swissy, 14. Now, why would you want to take a trade with a 14 pip spread? If you open up the trade, your entry would gap 14 pips. You'd need to make 14 pips just to break even. This is a sign that somebody with deep pockets is moving in the markets. Just stay out. Let the whale do what it wants to do. Let the elephant run through your garden and leave the footprints. Then you can follow it. Any other questions? Any other questions? No question from Gerard. Any questions from anybody else? All right. In the absence of any questions, I'm going to dismiss the class. Now, remember, the test this week is not whether or not you make any money. The test is, can you be disciplined enough to trade like a professional trader? Will you wait? 1 second. Will you wait for this to play out? If it doesn't, it doesn't. Fibonacci tour session. Yes, Reggie, I'll do that this week. I'll do that this week, definitely. But yeah. So, this is your test this week, guys. I don't care whether or not you win the trade. And I don't care whether or not you would have won or you win a trade you take in the other direction. You can, I'm not saying don't trade. For those of you who are already trading live, experienced traders, carry on with your normal trading systems, your normal trading entries and exits and all that stuff. But I want you to stock this entry this week on each of these 3 pairs, on at least one of those 3 pairs. If you can get a bearish on GU or EU or bullish on Swissy, in which you see that pattern play out, you just stock it, take it on your demo account, only demo please, and send me the screenshot. It will be so fulfilling when you see, if you see it play out the way we called it. All right, guys. So, in the absence of any more questions, I'm going to dismiss the class here. Have an amazing week. And God bless. And of course, this is our schedule for the week. Don't forget, put these in your diary. Information will be in the Telegram groups and channels.